The markets are going crazy today. There's no question about it, but I'm going to explain the 3 reasons why. And if you don't know all 3 off the top of your head, then stick around. These are very important stuff that are moving the financial markets from a fundamental perspective massively. The S&P 500 down, the NASDAQ down as well, the dollar index ripping higher here. This is a bit of a concerning move, to say the least, compared to what we've seen recently, which has just been stock market drifting higher and, all sunshine and roses. Seems like that might have come to a close. Let's jump in. So yesterday we're hanging around the office and the stock market starts to drift higher and things are looking good. But then suddenly the market starts to sell. And I look at it and I say, what's going on here? I don't see any economic news, but then I started getting really concerned when it didn't just sell, but it kept selling and it kept selling and selling and selling. And then, as I'm kind of becoming worried, I'm like, what's going on here? I don't have any stock market positions at the time, but this was still a concerning move. I was like, what is driving this thing lower? Well, at the same time, I took a look at the price of oil. And if we take a look at the price of oil, well, let's go US oil here really quick. Look what we saw at the same time. A massive jump in the price of oil. So what could be going on here? I'll give you one more hint. You ready? Here's Lockheed Martin's stock. Now, if you don't know Lockheed Martin, of course, is involved in creating a lot of military and aerospace technology. It jumped at the same time despite the broader stock market selling off. So what is going on? Well, I've got 3 things that are moving the markets here for you today. So the first one I want to talk about, we're going to just do a quick little fundamental breakdown, is of course the real situation that surfaced yesterday, which is the situation with NATO and Ukraine. Basically, it looks like there could be a pretty good chance that Ukraine is going to become a part of NATO, which is a direct insult to Russia, who has been basically very adamant that they do not want that to happen, that they're very against that happening. And so when we see that, the market freaks out, because if that does escalate things, it could create supply issues, it could create increased sanctions, it could create war. All of that is terrible stuff. So the market freaked out, bought oil, bought defense companies, and sold the stock market at the same time. But that wasn't the only thing that happened in this window. I mean, yesterday afternoon was crazy. We also heard from a Fed official that basically really pushed back and sounded super hawkish compared to Jerome Powell, saying that, basically they don't think 3 rate cuts are in place. They think that, or that are coming this year. They also think that, the Fed could choose not to cut rates this year. The idea is basically hawkishness. And then, of course, we had this morning the NFP jobs data, which I actually think is the least exciting thing out of this 3. Now, of course, all of them were interested, and we'll talk about each one in detail. But first of all, again, why would this be a concern to markets? Well, if we do in fact see the situation escalate in the Middle East or in Ukraine and Russia, if that happens, it could create supply issues. The price of oil could massively spike, as it already has, and it could cause inflationary issues. Now, I am long oil, and this is not the reason I was long oil. I liked, some of the other factors that I look at, but I am still long oil, and this trade has become a monster position for me. I'll show you here. We'll just pull up the screen. I'm long gold and I'm long oil. Both, of course, are very good places to be right now, considering everything that's gone on in the last, 24 hours. Here's a quick look at gold at the same time. Gold continues to jump here, and really just a monster trade. That being said, I'm not long S&P 500 or NASDAQ or anything like that, but I have sold some puts. I'll show you really quick those positions, but before I do, let me also just take a look at some stuff here. In terms of current positions or current signals from the Edge Finder, the oil market continues to be a positive one, right? So oil looking really good. The dollar coming in really strong. In fact, I'll show you some major currency pairs right now. So when we look at the majors, what we have is dollar CAD bullish, dollar yen bullish, euro dollar, Kiwi dollar, pound bearish, meaning favoring the USD out of those crosses. So you can see the Edgefinder has really pivoted into a bullish setup. And this was mostly what we were talking about yesterday, which ended up being great timing because now the dollar index is jumping off of this 4-hour level of support that I marked up and sent out to our Telegram channel subscribers yesterday. By the way, the link for the Telegram is in the description down below. So price jumps off of this, and it does look like now with some of the geopolitical concerns and the strong labor market, which is our next thing to talk about, the dollar index could have some more room to go. Let's take a look at those jobs numbers. So jobs data came out this morning and we saw pretty much a rock star report. Let's start with the big one, jobs change. We had 303,000 jobs created compared to the forecast of 212,000. That's a huge jump. They also didn't revise the previous one by much, and at the same time, unemployment rate actually fell from 3.9% down to 3.8%. And with that said, average hourly earnings also stayed steady, and so overall, this was a really rock solid jobs report. And of course, that's really good for the dollar, but it's not great for the inflation story. If rate cuts are going to get pushed back, they're going to get pushed back on strong economic data and stubborn inflation. And this is certainly not helping the rate cut story today. But despite this news, it does still seem like the market is thinking we will get our first rate cut in June. But if we continue to see any strong economic data or inflation staying stubborn, it's possible that this could change and that the default could become July. We've continued to see things get pushed back in terms of rate cut expectations, and if that continues to be a trend, the market's not going to love it. And neither is gold, by the way. Gold will also have a little bit of struggle. That being said, why isn't gold down today? The reason gold is not coming down here today is kind of multifaceted. Number one, the jobs data came out strong. So you would think, well, strong jobs data, strong USD, that should bring the gold market down, right? But remember, geopolitics. We talked about at the top of this video. You have to consider things if you're going to be a fundamentalist. You have to look at the full story. Geopolitics, there's a risk premium associated to the price of gold, and I would argue to the price of oil right now. With that concern, right, we are seeing continued escalation in the price of gold simply because people are not sure what's going on in those, war-torn areas of the world right now. And if that continues to escalate, again, there is a premium assigned to the price of gold. And that's why I don't think gold is not necessarily shooting higher here today. I mean, it's just slightly up. I think if there was soft jobs numbers today, you would have seen gold take out the all-time highs. But again, remember, geopolitics, economic data, and of course, just pure old price action momentum all impact the price of gold. Also, pretty soon we will be getting the latest round of commitment of traders data, which will give us an insight into what institutional money has been doing recently. And I imagine that being a very, very important piece of information. Again, that data will automatically get imported by the Edgefinder as soon as it's released. So if you do not have a copy of the Edgefinder, I also wanted to mention something. If you've been watching my videos for a while, I've got a surprise for you. We're currently doing 45% off on the Edgefinder, which is our biggest discount price of the year. If you want access to the same fundamental software that I'm using to find the trades that I do, you can get a copy right now for literally our biggest discount of the year. No cap, no joke. It is the best price of the year. We're doing this because we're celebrating 2 years since we launched the product. We've been in constant developer mode for the last 2 years and continue to work to improve the software. And to celebrate our 2-year milestone, we are offering it for a huge discount to you guys. If you'd like that information or you'd like to pick up a copy, there will be a link at the very top of the description down below where you can chat with someone on my staff about getting yourself a copy. So take advantage of that. There's one final piece of the puzzle that was, I brushed over it. It's the Fed official that was this hawkish yesterday, which of course really is not great for the market either, especially in combination with strong jobs data and geopolitical conflict. I mean, that's just a recipe for the stock market to get out of its own way and just sell off. So really kind of curious. You also see interest rate sensitive areas like the Russell down here today. Silver slightly down on the day. Here's platinum, oil also down, up, still positive on the day. And my goal here is if we continue to break through the highs, I'll just keep trailing this stop and letting that winner run. Yesterday, right around the end of the day, I went ahead and sold some puts off that big sell-off on the S&P 500. You can see it being reflected in VOO. That is an ETF for the S&P. I sold puts on that one, and I sold puts on a tech ETF, XLK, while at the meantime, some of my other positions are going not so great. TLT, the bond market completely went against me. So I am floating a loss on that one. And XLY also not looking so hot. So I've sold more puts and we'll see where the markets go from here. If they do rebound, I should make some good money on these puts that I've sold. And if they continue lower, then I could get assigned. And what assigned means is I basically have to buy the shares at the agreed upon strike price. So 460 on BOO, XLK, etc. I do have an options video. If you'd like more information about that, we'll leave it in the top right hand of the screen on the card that's popping up. And also here's an update on my oil, gold position, FXI, the Chinese position. This is all my current positions on my live US regulated brokerage account. I show this for transparency purposes, but also just as kind of I like to do it in my videos. It's a nice way to update kind of my exposure and my thought process in the market. If you'd like to trade with this broker or the other ones that are linked down below in the description, all of them come with special sign up perks, and they are also transparently referral links. If you choose to use them, you'll be helping out my channel, and I very much appreciate that. Have a great rest of your day. I hope this was helpful to you. Subscribe if you're new. See you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.